Hi, good morning. Thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Mathew, and with me is Mahima Vachharajani. I thought I'd gotten through the opening just right, but then I stumbled at the end. Mahima Vachharajani, and we will take you through the next 1 hour of trade. And it feels a little better to be introducing the show today because finally we have a break in the selling. And we have the equity markets that are trading in the green as I speak to you. Let's pull up the Nifty 50 and see where it's currently trading. Not very big gains, I must say. Just about 0.5% or so, but very close to the high point of the day. What is more interesting and what is more heartening to see is the fact that the broader markets, you're not seeing as much selling, right? So you're seeing the mid-cap index that is currently gaining about 0.9% or so, and it's rebounded very sharply from just about 10 o'clock. If you see on the screen, even the small cap index trading with gains of about 1.4% or thereabouts. The question is, do we continue to see this kind of strength in the remainder of the session? That really remains to be seen, because even in trade yesterday, in the last hour of trade, you saw quite a bit of frenetic selling that saw the benchmark index also lose about 1%. So as of yesterday, from the high point for the small cap index, we're down about 7.5% or thereabouts, and the Nifty 50 was down as much as 6.8% yesterday, so we recovered somewhat from that point. But let's take a look at some of the key movers today, and the indices will give you a bit of flavor as to what's moving. IT clearly leading the pack and doing quite well for itself, up about 2.5%, 2.7% now in fact. You have metals that are doing well, media, auto, as well as finance that is doing well, but the Nifty Bank is lagging behind. It's just about flat in trade right now. Not doing too much, and energy is the one pocket that is underperforming. Now there are several individual names that are moving very sharply. I'll name just a few of them. Amber Enterprises on the back of earnings doing incredibly well, 17%. You have Hyundai Motor, which is up about 4%. You have Paytm on the back of an update and the NPCI approval for onboarding UPI customers. It's up about 9.6%. A couple of brokerage notes also coming through that are positive on Paytm. But M&M Finance is not done too well. On the losing side, you have M&M Finance is losing about 2.4% off the low point of the day, but on the back of earnings. And a little pain in the microfinance space is what the issue is. Bajaj Finance, I was quite curious about this, Mahima. It's up as I speak about 6%, and of course it was being pointed out by Harsh just a short while back that it had gotten beaten down quite a bit as of yesterday, and yes, there were certain issues on asset quality, but by and large it's met estimates.
Absolutely. So in terms of numbers, by and large, they are in line with the estimates overall. Credit cost was the only dampener in the result. However, the stock is reacting positively otherwise to the results. There has been adverse guidance as well on the credit cost, and most brokerages believe that the worst is likely behind now. In terms of the numbers, net interest income has gone up 23% YOY and 6% around QOQ. Operating profit has significantly gone up 25% by YOY, which is quite a significant jump, and QOQ also it has gone up by 5%. Provisions are up around 13% QOQ, and PAT overall has gone up 13% YOY and 3% QOQ. Now ROAs, however, have taken a slight hit. It's at around 4.48% versus that of 4.63%. So down 15 basis points QOQ. Gross NPA is up by around 1.06%.
No, it's up by 20 basis points to 1.06%.
To 1.06%. And net NPA is up by just 8 basis points. So that's the overall picture. Plus loan loss to an average AUF is at around 2.16% versus that of 1.99%. And AUM has seen an uptick of almost 29% YOY and 6% QOQ. So overall numbers are looking good. The guidance on credit cost is the only thing which is a damper.
And ultimately that is what the NBFC space has to watch for. Saurabh Jain, Equity Head Research at SMC Global Securities, and Ayush Mehta, Technical Research Analyst at Nirmal Bang, joining us this morning. Thank you so much, gentlemen, for taking the time. I'll come to you first, Saurabh, on Bajaj Finance. What do you make of the numbers? And were you concerned at all with the guidance on credit costs going up to as much as 2.05%?
Hi, good morning, Alex. I mean, certain factors that company has already elaborated is that on some parameters they have done good. On the cost of deposit sides, the company is not that happy. And one thing which I think market would have liked is that the company has worked a lot on the customers which have three or more live unsecured loan, because this is the basket where delinquencies rise a lot. In the second quarter also, the company has seen same kind of a phenomena. The delinquencies have risen, and that is why we are seeing that PAT coming at a growth of 14%, while pre-provisioning operating profits shown growth of 20-25%. So in that sense, I think there is a bit of concern on the cost of deposit on the credit cost side, but I think the valuations are close to where where they were in the 2020. So valuation comfort is there and growth is coming back, and the management is saying that things will be better going forward.
Right, so there is valuation comfort and growth is coming back for Bajaj Finance as per Saurabh.
I'm so sorry. Saurabh, do you want to complete that view? Is it a buy according to you at this price? At what level would you accumulate Bajaj Finance? And what is the upside potential that you see right now?
I think I'll put that the downside is protected. It is a value buy. I mean, one can accumulate the stock for the long term, and once the things start moving up, in which the management has said, and then we'll see some kind of a re-rating in the valuation too, and that is the time when we'll see good gains coming in.
Got it. So value buy for Bajaj Finance is the view coming in. Viewers, just for viewers' context, to ask your queries, you can WhatsApp us on the number that is flashing on your screen right now. Moving on, let's take the first query of the day. It's from Raj Shekhar, who's from Bangalore. He's bought Hoodco 500 shares at 116 a piece, and he's not sold it when it was at its peak, and now it's falling every day. That's his question. Now, he has made significant amount of profits, is what he's saying, but he wants to understand whether to keep holding that, sell or purchase more. So Ayush, I'll come to you with this one. How does Hoodco look to you on the charts?
Well, talking about Hoodco, definitely it has retraced a lot from the higher levels of approximately 353 that made a higher in approximately July month, and currently trading at around 203. But the important point to note here, it is currently taking a support of its previous support. So I think this 200 rupees level is a very important support zone. If that is broken, then I would recommend to book some partial profits and re-enter Hoodco at around 150, 170 levels if they get the chance. Otherwise, below 200, you should book a profit here.
Okay, all right. So that's the view on Hoodco. It's down about 34% in the last 3 months or so. Let's talk about Tanla platforms, and this is a question from Ankit. He's writing in from Hyderabad, and the stock is currently trading at 756. He's got the acquisition price is 1,100, which is quite significant and quite high. He's asking if the question is being asked right now. I'm responding yes. Ankit, hope you can tune in time for the answer. Saurabh, on the fundamentals, would you say that he should hold on to this? Should he buy at this price? What should he do?
I think it is a small company in the IT category. Not all companies are doing that great, and market is not, perceiving that there is any kind of a turnaround on the operational side, and that is why we are saying that the stock is tanking. I think it is better to get rid out of the stock in case you find any kind of a rally.
All right. The next question is from Ajmal, who's from Chennai, and he wants a long-term view on Waaree Renewables. So Saurabh, I'll come to you for this one. Long-term view, and especially, today is the last day of its parent company's IPO subscription as well. If you have a view on that also, it would be great to get a view on that as well.
I think it is the space in which the company works is in. It is a space of interest for everyone. I think the sector has a tremendous potential going forward, and that is why we saw some very good re-rating coming in the Waaree. And essentially, the parent company is garnering a lot of traction. I mean, the grey market premium is close to 100%. I think it is good to apply in that IPO.
All right. But any view on the listed stock right now? Would you buy into Waaree Renewables right now?
I think the interest, in my opinion, interest will shift to the parent company now.
Okay, all right. Fair point. Manoj from, I'm going to actually take this next. Abhishek Bhatia has got the next question. National Fertilizer is the name that he's talking about, and he's bought an average price of 134. The stock is currently trading at 108 or thereabouts, and he's asking for an update as to what he should do with this. On the technicals, Ayush, would you suggest holding on at this point?
Well, talking about NFL, so NFL has again shown some strong profit booking from the higher levels. The important support zone of this stock is at 105 rupees. That is on the closing basis. If there's a closing below 105, then you should definitely exit. But I'm expecting a bounce back at around those levels, and Sensex should give a bounce back here.
All right. Well, the next question is from Manoj, who's from Bangalore, and he wants to know, he wants to have a long-term view on Ujjivan Small Finance Bank for the next 3 to 5 years. He's holding around 500 shares that he bought at 42 rupees, and currently his loss stands at roughly 1800 rupees. So, Saurabh, your view on Ujjivan Small Finance?
I think it is a very small NBFC, and the market is not happy with the company's growth. And there was always a question pertaining to the asset quality. The delinquencies in the past have risen a lot, and that is why we saw that the stock got beaten down heavily, and it has underperformed if you compare with the any other good NBFC also. So, in my opinion, I think it is better to get out of it.
Yeah. All right. I'm just curious about what you say about the technicals. I know we took a view on the fundamentals of Tanla platforms just a short while back. Ankit is asking whether or not it makes sense at all on the technicals. Ayush, can you take a quick look at the charts and see whether a sell at this point is the best price? Is there a better price that you can suggest?
Well, I think Tanla platform has broken all the support zones here, and even today it is not performing well. Despite there's a bounce back in the market, even I feel he should exit from the stock.
All right. Well, the next question is from Guru, and he's asking whether this is the right time and right price to buy ABFRL. Well, lots going on with the company. Company has demerged its premium segment. It's also acquired TCNS Clothing. But I think from a technical perspective, is this the right time and price to buy the stock? Ayush, your view?
Talking about ABFRL, it is on the sideways move right now on the long-term charts, but the stock is currently taking a good support of its. There's a good support from 295 to 300 levels. If we can hold it with a stop loss of 295, then definitely it's a good buy, and you can average it around 300 as well. But 295 will act as a very important strict stop loss for this stock. Again, we can see the higher levels of 365 in this, so I think you should buy it from this levels.
All right, Bajaj Housing Finance, recent listing and a stock in focus. Jaishil Amin is wondering whether this is the right price to buy it at. Saurabh, the results came out yesterday, assets under management crossing that 1 lakh crore mark. But the loan growth wasn't very substantial, right? And the space is interesting. It's not, at least it's not as worrisome as the unsecured side. So would you suggest a buy at this price? And what is the long-term prospect that you would talk about?
I think long-term prospect for the Bajaj Housing, it looks good to me. I think the company has shown consistent growth and above average the industry growth in the past, and the recent results are no different. I expect that similar kind of a growth to continue. On the valuation side, I am not feeling that comfort because, the IPO came, and after the IPO, there was a good listing, good premium has already been there. So I would rather suggest to wait for corrections and buy in a staggered manner.
All right. The next question is from Satya, and he, his question is very particular. He wants a view on Meghamani Organics. He's bought it recently at a price of 114, and he wants a support as well as a resistance level for the particular stock. And he's also asking, if not this, should he switch to Reddington? Ayush, your view on both of these? How do both of these look on charts?
Let's talk about MOL first, that is Make Money Organics. Make Money Organics has performed really well in recent times, although due to the market pressure, we have seen some profit booking from the higher levels of 115, although the stock is looking positive at the current levels as well. It is taking a good support of a upward sloping trend line. So definitely, if someone wants to buy the current levels, can definitely buy at these levels. I'm expecting another 120 rupees in this stock. And if you're talking about Reddington here, Reddington long-term chart is weak, although it's trading in the upper channel, but it is currently near the support zone. And if you get it on 160, then I think that would be an ideal buying zone for Redington. So we should enter Redington at around 160 levels, and MOL can be bought today.
All right. The next question is on, make money or oh no, this is already done. All right. I want to take this because I'm asking for more clarifications. Hemendra Nanavati is written in, and this is the kind of question that I love to take because the kind of valuation or the kind of value increase that they've seen, the wealth creation that they've seen is absolutely phenomenal. We've got Hemendra, who's bought Thermax at IPO price in 1995. He's got 1,000 shares. He says he thinks that the IPO price was 190 rupees for 10 rupee face value. I was asking for a little bit of a clarification there, but the stock has gained, get the 17,428%. Now try and calculate how much of a gain that is. He's sitting on, so he's saying his initial 200 shares has become 1,000 after the split or after corporate action over the years. And now he's wondering whether to sell at this juncture. I'm assuming he's in no rush. So sort of from that perspective, would you take money off the table? Would you reinvest it elsewhere for a stock that has done so incredibly well for this viewer?
See, I mean, yes, the stock has done incredibly well, and this is a very good company. But I think when he has asked that it is a good time to book some profit, in my opinion, maybe he may be in need of some kind of a money. So I would rather suggest that maybe you can take some money off the table because the kind of a growth that is now expected from the Thermax is close to 15-20% kind of a CAGR. And the valuation here are quite expensive, never seen in the past. So it's a very good bull run for the capital good companies that we have seen. And from the last few quarters, it is oscillating in a range only. So if you want to take some money from the table, maybe 20-30%, yes, you can.
I think it's really commendable, the kind of patience that he's had. And
exactly.
I mean, this is way before even I was born. So
okay.
It's very interesting.
You can speak for yourself, okay? I'm not that young. Unfortunately, I wish that I was, but then no.
But,
I mean, all the you can't see the grey hair. It's all there. But 1995.
But kudos to Hemendra for having so much of patience and holding the stock. And of course, he's getting such profits and he's getting that as a reward. But moving on, the next query is on IDFC First Bank. He's bought, so this is from Akash Katyan, who's from Pune, and he's bought 525 stocks of IDFC First Bank at a price of 85.2. And he wants to know a long-term view, and he also wants to know whether he should add more to his portfolio or not. Saurabh, I'll stick with you for this one. Your view on IDFC First?
I think we have a constructive view on the banking stock. Maybe there is some kind of a pressure because of their on their net interest margin and the higher cost of deposits, and the credit growth is not happening. Normally, it doesn't happen in the first half of any of the financial year, and it starts growing in the second half of the financial year. So in case of IDFC, I think the balance sheet is quite good and the valuations are also comforting. The bank has made quite a lot of progress in the last few quarters, and it makes a case for a hold in case of IDFC. I think if you want to buy some more, you can surely buy some more, and maybe we'll see some kind of activity resuming in again when we jump into the fourth quarter and when the budget is likely to come. So maybe some kind of activity we'll see firework in the banking stocks.
Interesting. The update coming in at the bottom of the screen, government to review scrapping of windfall tax on crude. This is the tax that is levied on oil, the oil explorers. So ONGC, let's pull it up. It's reacted somewhat, so 0.6% or thereabouts. Remember, it was put in place by the government to look at a situation where crude oil prices were moving up very sharply, but they have been benign in the recent past, and you've had, in fact, crude oil prices hover around that $74, $75, $73 per barrel mark. I'm talking about Brent here. So it's been benign despite the fact that you've got geopolitical tensions, but all the same, it would be a positive in the event that there would be a removal, if at all, of the windfall tax. Bandhan Bank is the next counter that we're talking about. 238 is the buy price, and we've got Kishore who's writing in, and he's wondering whether to hold on to this. Is this the right time to buy more, and what amount can be bought at this point? The stock is currently trading up about 3.5%. Certain developments, Ayush, based on the a quarterly update, if I remember correctly, and since then it's done reasonably well for itself. What would you say should be done in the charts right now?
So while talking about the charts of Bandhan Bank, the charts are looking a little bit weaker here. It has given a breakdown, but the monthly closing is very important here. If we get it below 180, then definitely it's an exit, because I can see more downside in the stock. The bigger upside will be only seen once the stock crosses 215, which is the monthly downward sloping trend line. If that is broken, then we can see higher levels as well. So 215 is the make or break level, and the monthly closing 180 is a very important support zone. So if that is broken, then you should exit on monthly closing basis.
All right. So that's the view coming in on Bandhan Bank. The next question is from Suresh. He wants to understand if this is the right time and right level to purchase Suzlon. And this is from a long-term view. I think a lot of people want to know after the kind of run-up the stock has already seen. Saurabh, I'll come to you with this one. Do you think it's the right level to buy Suzlon from a long-term perspective?
I think it is a good company. The company has shown some kind of a turnaround, and so does the stock price. The valuation now is at the premium higher side. And in this market correction, we have seen some kind of a good selling coming in the stock price also. I mean, you can certainly go with the company, but I think the price is certainly higher. In case we do like utilities, similar segment, I feel that the money can be made in the companies like maybe Satluj Jal Vikas Nigam or NHPC.
All right. The next question we're taking is on Cochin Shipyard, and this is a question coming in from Braj Kishore, who's writing in from Visakhapatnam. He says he's 45 years old. He's bought at a price of 1,400, and he says that he wants to hold this for the next 1 to 2 years, which he has defined as a long-term period. Saurabh, on the fundamentals, would you suggest holding on? It's been under pressure. It's been under pressure in the last couple of sessions, yeah.
Fundamentally, there is no problem with the company like Cochin Shipyard. They have good contracts and good revenue visibility. It's only that these stocks got re-rated, to the extreme in the last 2-3 years. It is the valuation which is now which was at high premium, because of which these stocks are cracking down. I think 1 year period is slightly less. I think you should have a horizon of 3 to 5 years. Maybe the stock, if the correction in the broader market continues, this stock can further fall down. So it is always good to buy a good company at a good price. And since this company doesn't look cheap at this juncture also, so it is better to accumulate in a staggered manner.
All right, so it's an accumulate for the stock. I think the stock has just taken the beating since its OFS. Otherwise, for a year, it's been up around 106%. So good stock anyway. Well, the next question is from Saranya.
I think we should take the next one, IEX. It's a shorter term question, and it's going to be in focus because of the earnings today as well.
Got it. So the next question then is on IEX, and that's from Gotham. And they want to understand that they're holding 150 shares of IEX bought at 210. Should I hold or should I exit? So this is more of a technical question. So I'll come to you, Ayush, on this one. Your view on how IEX is looking on charts.
So talking about IEX has a very good rounding bottom formation on its weekly and monthly chart. But 175 is a very important support zone for this stock. If that is broken, then we can see more downside towards 140. So I would recommend to hold it with a strict stop loss of 175 here.
Okay. All right. The next one is on pharmaceutical company Cipla. Saranya is asking. She's wondering whether to buy for the next 3 to 5 years. Saurabh, a lot's been said about the pharma pack as a whole and whether or not it's an opportune time to, ahead of time, get into this before a full-blown recovery comes through. Already some of these names have seen quite a bit of interest over the last 6 months. Would you suggest that Cipla is a good buy?
I mean, the pharmaceutical sector per se is looking good to me. There are many stocks which are doing good. For example, the maybe Natco Pharma, Alembic Pharma, and Cipla is no different. I think the stock got re-rated lastly because of some news that the that the promoters are willing to sell, but that news doesn't materialize, in my opinion. So some kind of a premium has already been built in the stock price. So in my opinion, I think it is better to wait for correction. And if you want to go into the pharmaceutical pack, I think Netco, Alembic, IPCA offers better opportunities.
All right. On that note, we have to slip into a very quick break. Saurabh, Ayush, do stay with us. We'll continue queries on the other side. Viewers who've already written in, do stay with us. And if you are thinking of writing in, by the way, let me quickly pull that number across the screen, and you can send your questions to us in the break, and we'll be back on the other side to take more of them. So do stay tuned.
watching Ask Profit, a show where we answer all your stock-related queries. For the viewers who are just tuned in, you can ask all your stock-related queries, whether they're fundamental or technical, on the number that's flashing on your screen. And moving on, we'll take the next question. The next question is from Ribin Dev, and he wants to know whether this is the right price to enter SBI or not, or should he wait for another price decrease in the stock. Ayush, I'll come to you with this one. Your view on SBI, how does it look on charts?
Well, SBI has taken a good support of its 200-day moving average in today's session, and it has shown a good bounce back. So can buy SBI at the current levels for a target of 820, and the stop loss should be at 778.
Was that a slip of the tongue, or do you actually mean HDFC Bank? I'm just curious. Ayush, is it also a buy on HDFC Bank?
Well, definitely HDFC Bank is definitely a buy. Even yesterday's market, it has held well, and today's market also we are seeing a good rally. Definitely should buy HDFC Bank for a target of 1800 here.
All right. So I'm coming back to you on the next one. This is on Unicommerce e-solution, which we've got Leena. She's asking a question. She's writing in from Kolkata. She's bought at a price of 200, and she's wondering what kind of a target can she expect over a period of 6 months to 12 months. Ayush, do you have the chart in front of you?
Unfortunately, I don't have much data on this stock.
Okay, fine. Take care. Saurabh, any view on this particular counter? And it's a relatively short holding period that is being planned, 6 to 12 months. What's the view?
Alex, I haven't seen this company.
Okay, no, that's a fair point. Let me take the next question then. And sometimes this is going to happen if you are invested in small companies. Do bear in mind, we can't always get your view. IndusInd Bank is the name of the next counter that we're talking about, and Shyam Gopal from Hyderabad has bought at a price of 1,406. He's wondering whether to hold or exit at this point. The stock is currently trading below his buy price at 1,281. Ayush, on the technicals, what's the view on IndusInd Bank?
Well, IndusInd Bank is currently trading in a downward sloping channel, and it has broken the downward trend line of that channel, and it is currently trading below that. If we see a bounce back at around 1300 levels, and the closing is above 1300 levels of this October month, then definitely we can expect a bounce back. If there's a closing below 1300 levels in the monthly closing, then definitely you should exit from the stock.
Well, the next question is from Amit Pathak. We already took a funda view on Suzlon, but Ayush, I'll stick to you with this one. He wants a suggestion on Suzlon. How does Suzlon look on charts to you? He's made a significant profits already. Around 1,11,000 are his profits currently. So going forward, how does it look on charts?
Well, talking about Suzlon, we do not have a very concrete recommendation on Suzlon, but looking at the charts currently, it has taken a good support of the 100-day moving average, and on the daily chart, it has formed a good double bottom formation. So I think it should give a bounce back here till the levels of 75. So I think you should hold it with a strict stop loss of 64 here.
All right, let's pull up the next question, and it's from Kaushik, who's writing in from Pune, and he's asking about IDFC First Bank. And quite a few people have talked about the fact on this program, Saurabh, on the fundamentals, they are positive on IDFC First Bank. But Kaushik has bought at price of 80, and he's been averaging, he says, for some time. The stock is currently trading at 67 or thereabouts. Would you suggest that he holds on?
I think my view remains the same. In a few minutes back only, I said that it's a good bank. Quarter they have shown good amount of progress. It is a stock which you can carry for next 2, 3, 4, 5 years. And one thing I would like to mention is that if he is keep on averaging, one should remember that a particular stock should not be in your portfolio of more than 6 to 7% of your portfolio value. So that should not be the case. Ideally, you should not buy one stock more than that. That is the only point I want to make.
All right. I think we should declare today as the banking day. We've got a lot of queries on the banking sector.
Yeah.
But well, the next question is from Mahesh Babu, and he wants an advice on Sula Vineyards. Now he's bought
That's as far away from banking as you can get.
Well, it's the festive season, some festive stocks probably. So he wants an advice on Sula Vineyards. Bought it at around 502, and he's bought 100 shares. Currently, the stock is trading at 417. So I believe that he is, incurring some losses. So he wants to know whether he should keep holding it or sell. Ayush, I'll come to you on this one. How does Sula Vineyards look on chart?
Well, the chart of this stock is slightly on the weaker side. It has taken a good resistance of its downward sloping trend line and everything. So looking at the charts at the current levels, by taking RSI and everything in consideration, the stock is definitely weak at the current levels. Should definitely exit from the stock.
All right, Murthy from Hyderabad has got the next question. And he's asking, okay, it's a specific question to the news break that you saw on the bottom of your screen. I'm going to ask Saurabh to take this. And I did mention the oil exploring companies will stand to benefit from a scrapping of the windfall tax in crude. Will it be a sizable benefit though, Saurabh?
I think these windfall gains were levied because these companies were enjoying higher realization because the crude prices were higher. And now that has not been the case. If you see, the crude has already fallen into $70 and these companies are not making any extra bit of money, and that is why there is no point of government going with the windfall gain tax. That is not certainly now a case. So that is why the government has removed it, and I don't think so. It will be any trigger for stock prices to rise. In case crude oil prices marches upwards, then it makes sense to chip into the upstream oil marketing oil companies.
Well, the next question is from Rajesh, who's from Andhra Pradesh. He's bought Sai Silks limited stocks at rupees 203 per share. And he wants to understand whether it's good to hold or sell or buy in correction. So, Ayush, how does Sai Silks look to you on the charts?
Yeah, so talking about Sai Silks, the stock is definitely doing well. Though because of the correction, we have seen some profit booking in this stock. So we should definitely hold this stock. We do have a buying recommendation from our fundamental team as well on this stock. Should definitely hold Sai Silks. The first minimum target we're expecting is $200, and if that is seen, then we can expect the higher levels to 240 as well. But it's going to take some time. So I would recommend to be patient and hold stock.
All right. We've got the next question to talk about. Did we take Reliance Industries? No, right? Okay, so Reliance Industries is the name of the counter, and I would suggest everybody who's tuning in to tell us their name. Okay, I don't know who's asking this. We've got Reliance Industries bought at levels of 3,062 at 150 shares bought, and this is a slightly elevated level. Recent correction or drop in the stock price of as much as 10% or more. Saurabh, I'm curious what you make of this, and would you suggest buying at this point, holding on? What's the view here?
In my opinion, Reliance Industry will always remain a portfolio stock. I mean, you can invest this company for years to create wealth. At some point in time, it runs, and some point in time, it just makes consolidation. I think in the last annual general meeting, there was the expectation about the new any kind of announcement on the demerger side. That didn't materialize. I think that disappointed the market. I think the major trigger will now come into the ending of the financial year when their chip making facility will get inaugurated. In my opinion, I think it is not. This is not the best time to invest more money. I mean, in this stock, if you have a plan, say for the next 3 to 5 years, then it makes sense. You can accumulate at these prices.
View coming in on Reliance. The next question is from Ajay Kumar, who's from Punjab. Now he wants a view on Tata Steel. He's bought 250 shares at 165 a piece. He's not mentioned whether he wants a long-term view or a short-term view. So I shall come to you on this one. How does Tata Steel look to you on the charts?
So talking about Tata Steel, we've seen some pressure in the metal stocks where Tata Steel is also seeing some profit booking at the higher levels of 183. Well, it has broken an important support zone of 153 and it's currently trading around that levels. The next support zone will be at around 140, but overall the stocks look positive. It is taking good support of its trend line. So I think we should continue to hold this stock, and there's going to be higher returns in the future for this stock.
All right. We've got a question on Equitas Small Finance Bank. We've talked about one small finance bank. I think it was Ujjivan Small Finance Bank earlier on in the show. Manoj Gupta has got this question. Did you just ask about this? No, right? All right. So 85 rupees. Sorry, I'm a little distracted because looking at the market and looking at the screen as well. But 85 rupees per share is the buy price. 1,000 shares have been bought. The question is, should they hold on? 68.5 is the current market price. Ayush, what's your view on the technicals?
Well, the stock is looking very weak. It is continuously taking the resistance of its downward sloping trend line. Should exit from the stock at the higher levels, or maybe once it crosses 70, you should exit the stock.
All right. Well, the next question is from Sunil, and he's holding 300 shares in JK Tyre at an average price of 165 per share. He wants to understand, should I continue to hold or add more? Ayush, your view on how JK Tyre is panning out on charts?
Well, JK Tyre is currently trading it near its support zone on a weekly chart and as well as monthly chart, so definitely should hold it. Once the stock crosses 400 levels on the closing basis, we can see higher levels towards first target will be 435 followed by 450. So should definitely hold this stock.
All right. The next question is JK Tyre. So JK Tyre is done. We've got NBCC, which so Birla Corp is the next counter. George has got this question. He's got 100 shares which he's bought at levels of 1,432. The stock is currently trading at 1,143. Given up a little bit of ground. Hold or sell is a question. On the technicals, Ayush, do you recommend that he hold on?
Talking about Birla Corp, it is currently going to test its support zone, which is at around 1100 levels. So till the time it is holding 1100 levels on the monthly closing basis, should continue to hold this. Once that is broken, then you should exit from the stock.
All right. Well, the next question is from Anbu. This question is particularly on NBCC. She's bought it at 102. And she wants a view whether she should hold or sell the stock. Ayush, your view on NBCC?
Talking about NBCC, it has broken its 200-day moving average on the closing basis, and even today it has taken the resistance of that level. So I recommend here to exit from the stock. And if someone wants to re-enter once it crosses 102 level on the closing basis, then should re-enter again. But I think for now we should exit the stock.
It's time, gentlemen, for the rapid fire segment, and this both of you all are familiar with this. We'll take as many questions as possible over the course of 2 minutes. I'd request you to keep your answers as short as possible. The first question is on Markson's Pharma, 300 shares bought at 37 rupees per share. Govind Bhatia from Dubai is asking whether it should be held on to on the fundamentals. What's the view, Saurabh?
Holding.
Hold is the view. Dhampur Sugar is the question that we're taking, and PJ Sharma is asking whether it can be held on to. 228 is the buy price, slightly elevated. Ayush, on the technicals?
Hold with the stop loss of 190.
Okay. Tata Motors bought at a price of 944 rupees per share. Can it still be held at this juncture is the question. I don't think that there is too much of a rush to sell. So, Saurabh, on the fundamentals, would you hold?
Fundamentals are weak now. Better to exit.
Okay, exit. Rao from Guntur is asking about the same counter. So it's a 1-year time frame. Bought at price of 980 Tata Motors. Ayush, for 1 year, would you hold or exit?
No, I would exit it.
Okay. Steel strips wheels, not a counter we talk about every day, but it is in the auto ank space. It makes essentially your strips for the wheels. Bought at a price of 220. Abhishek from Delhi wants to know a long-term view. Saurabh, what's the view?
Good company, hold it.
Okay, Raghavendra from Belgavi in Karnataka is asking about Rajdhani Metals, which he's bought. Okay, I'm going to avoid that question. DCB Bank I'll take instead. 117 rupees per share, 68 shares bought. Ayush, on the technicals, would you hold DCB Bank?
Hold with the stop loss of 109.
Okay. NHPC, Yelahanka, Ravi from Yelahanka in Bangalore is asking about this. Bought at 99 rupees per share, 1,100 shares. Would you hold on, Saurabh, on the fundamentals?
Hold it for next 2-3 years.
Okay, State Bank of India, we've already, I think, taken a technical view on the fundamentals. Would you hold, Saurabh?
Yes, it's a hold.
But is it a buy?
You can accumulate.
You can accumulate. Prabhakar is asked that question. So I think we've gotten quite a few questions answered. Saurabh as well as Ayush, thank you so much for joining in and for answering all of the questions that you did. Always a pleasure having you on the program. And that brings us to the end of this particular edition of Ask Profit. Thank you so much for tuning in. From Mahima and myself and the team that put the show together. I keep doing this. I keep nearly ending this. Thanks.
I thought you might say segment,
right.
but
yeah, thank you. Okay. Unfortunately, I've gotten so used to ending this show at the end of the rapid fire segment that I nearly ended the show. And thank you so much, everyone, for telling me we're not ending. All right, let's talk about Zomato, because that really is one of the stocks in focus. Forgive me, my brain goes into autopilot mode sometimes. The stock is recovered from the low point of the day, up about 0.6% or thereabouts.
Yes.
And it's on the back of earnings. The question that I have, Mahima, beyond the earnings, and whether or not we should look at it sequentially or on a year-on-year basis, the question that I have is, it's got over 10,000 crore rupees in cash. And it's planning to raise 8,500 rupees through a QIP. What's it going to do with all the money?
Absolutely. So a couple of things, which are kind of raising concerns for Zomato are one of these things that you rightly mentioned, that they're already sitting on a cash of roughly 10,500 and they're still raising 8,500. Now, what the management has said is that they want to strengthen their balance sheet further, which is why they're raising this kind of cash, and they'll be using this cash for further infrastructure development. So I think we'll have to wait and watch as to how this cash will be utilized overall. But, certain things to point out. Firstly, why the stock is recovered. The possible reason could be that they have hiked their platform fee just, a few hours ago because of the festive season. So yesterday, if you had put an order on Zomato, the platform fee was 6 rupees. But today, it's almost 10 rupees. So in terms of percentage, that's a significant hike of 40%. So I think it's because of that that the stock is now turned positive. It was down almost 4.6%, during market open. But it's recovered from that and it's up around 0.5% right now. In terms of overall performance, Q2 was not very bad though for Zomato. Food delivery, quick commerce, all of these grew in high double digits, even high triple digits for quick commerce. Hyperpure, another segment which is really auguring growth for the company, grew around 98%. So good growth there as well. District app will go live in the next 4 weeks is what the management has said.
So the platform fee is what right now?
It's 10 right now. It was 6.
Wow, it's moved up. It's practically doubled. And Swiggy is what? And
Swiggy, if I'm not very sure of that, but I think I'll check and definitely get back after the next link.
Okay, so you owe me something at lunchtime, and I'm going to hold you to that. But in the meanwhile, we have to move to breaking news. The government has warned social media platform X.com, which is the former Twitter, that allowing bomb threats to be posted on the platform could amount to abetment to the crime. It's quite a big statement to make, and this was discussed at a virtual meeting between officials of the Ministry of Electronics and Information Technology, or MEITY, airlines and representatives of those social media platforms, X and Meta, were at that meeting. Aishwarya Jain from NDTV 24/7 is joining us with the latest updates here. Aishwarya, what can you tell us? It's obviously a developing story and the government taking a hard stance here.
What we have been told is that last night, Joint Secretary METI Sanket as Bonway had conducted this meeting. He chaired that particular meeting yesterday night and called the social media platforms X and Meta as well. The airlines, which includes Air India, Vistara, SpiceJet, also were called, and certainly they were asked as to what actions they have taken on such social media handles from which the threat calls were received, and also there were the social media post that was done as well, to which they were pulled up. According to our sources in this particular meeting, the Joint Secretary went on to extent of saying that the present situation amounts to social media X fighting crime, and they did not take any of the action against such social media platforms. Apparently, these platforms were identified by the government. Remember, there were several meetings which were going on in the past as well. The Civil Aviation Ministry has roped in all the agencies, including the Ministry of Home Affairs and now METI as well, to identify those individuals who are behind this, and had been several instances where we have seen that few people had been detained as well, and now a major step has been taken where a strong statement had been given by the METI that the situation has amounted because of abetting crime of these social.
Thanks so much, Aishwarya, for getting us those details. Certainly something that we'll come back to you, of course, over the course of the day to get updates on. But there is another big update, and this is a setback for the edtech firm Byju's. It's coming from the Supreme Court. The top court has rejected the settlement between Byju's and BCCI. Varun Gakkar is joining us with the latest development here. This is really, Varun, the sticking point and the issue that Byju's has been facing in terms of staying afloat, right? It's been taken to insolvency court, and this is a development from that case itself, right?
Yeah, so in a big setback to the embattled edtech firm Byju, the top court has set aside the NCLT order, or the NCLAT order that put an end to Byju's insolvency process back in August. Now, a little background to the case before we delve into the details. In August this year, the NCLAT approved Byju's settlement with the BCCI, thereby putting an end to its insolvency process. Now, according to this settlement, Byju's committed to settling its dues to the tune of nearly rupees 158 crores with the BCCI. Now, this prompted US-based lenders backed by Class Trust LLC to move the apex court against the NCLT-approved settlement based on the allegation that the money that was being used for the said settlement was siphoned from them and that the sources for this money was questionable. In addition, it was Class Trust's contention that Byju's owes it nearly rupees 8,000 crores and that the NCLT approved the settlement based on a meager amount of rupees 158 crores and put an end to the insolvency process itself. Now, the top court then heard the matter at length for nearly 2 days, and the judgment has now been delivered. In toto, the top court verdict essentially means that the insolvency process for the edtech firm will continue. And while setting aside the NCLAT verdict, the top court said that the NCLAT did not provide adequate reasoning while approving the settlement process with the BCCI and iterated that the due process of law was not followed. In addition, the court has directed that the settlement amount of rupees 158 crores needs to be returned back to the committee of creditors, and this money has to be retained in an escrow account. Now, the case has also been sent back to the National Company Law Tribunal for a fresh adjudication on the issue of whether the settlement was lawful or not.
The summary of this is basically that the insolvency for Byju's will continue. I mean, 8,000 versus 158 crores, that's that's a very insignificant amount. So
no doubt.
That's the Supreme Court verdict on that. And just a clarification, Swiggy platform fee is still 6 rupees for now. But moving on, the government is likely to review scrapping windfall tax on crude. This is as per reports from Bloomberg. Quoting the PMO advisor, he added that the imposition of windfall tax on crude oil has no relevance now. Vikas Srivastava, who tracks this space very closely, joins us with more details.
Yeah, hi. As you said, today a top government official here at the event at Biogas event in New Delhi spoke about this, that the government has started reviewing this windfall tax on oil and on crude oil. So basically in July 2022, government had introduced this after the Ukraine-Russia war. So the crude prices had crossed $100 at that time, and most of these upstream companies, especially ONGC and OIL, they started making a lot of windfall profits. To balance that profit, government had introduced it in July 2022. However, so basically if we talk about the windfall tax, it was almost as high as 30,000 rupees per ton, which was in September close to 1,850 rupees per ton. And recently it was reduced to zero. But what is more relevant and going to be more relevant would be if the geopolitical situation in Middle East increases or if it escalates, what will be government's stance after that? Because likely the crude prices may cross 100 once again. So would it be that government would again review the prices and look at windfall tax again?
Very important question to ask, and certainly something that has implications for listed companies as well. We spoke about a few of them, the oil exploring companies. Let's talk about Gujarat Fluorochemicals. It's another stock in focus, and Varsha is joining in to tell you what's happening here with the company. Varsha, what's the development here?
Well, hi Alex. So yes, a big development when it comes to companies. So Gujarat Fluorochemicals wholly owned subsidiary, that is GFCL EV, is going to raise 1,000 crore at 25,000 crore valuation. Now fundraise is led by Inox GFL and promoters and key investors. Now this fund will support the capex plans of Gujarat Fluoro in EV and ESS sectors. Now the key products that this company is going to manufacture is electrolyte salts, cathode materials, binders. Now all these chemicals are used to make lithium-ion batteries. Now let's talk about the capex plan. So company is going to invest 2,400 crore of capex over the next 2 years. That's what they have said in the last con call, and they're aiming 2x asset turnover and at 25% EBITDA margin. And GFL also plans capex of around 6,000 crores over 4 to 5 years. Now there are also there's been engagement with global customers. They've engaged with 20 plus global EV customers, and the revenues from this are expected from second half of FY25. And lastly, if I were to talk about the market outlook, EV battery market is expected to reach at $300 billion by 2030.
Thanks so much, Varsha, for getting us those details. As we end this program, we are holding on to gains of about 0.2% for the benchmark index, and broader markets are also looking sanguine at this point. But that brings us to the end of this edition of Ask Profit from Mahima and myself, and this time we're actually ending the show. Thanks so much for tuning in. Do stay tuned. Lots more coming up over the course of the day, and this is NDTV Profit.